This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Getting to work. The already solid American job market got even stronger last month, but there's still one big problem.
Face-to-face, President Trump and President Putin meet for the first time, and global investors listen closely for signs of tension or progress.
Writing on the wall, graffiti artists used to run from the police. Now one is using her talents to run a growing business. Those stories and more tonight on Nightly Business Report for Friday, July 7th.
Good evening, everyone, and welcome. American employers did a lot more hiring than expected last month. That's good news for job hunters and for investors who saw stocks climb on the report. According to the Labor Department, the U.S. economy added 222,000 jobs in June. That was a lot more than the 174,000 expected. The unemployment rate ticked a little bit higher to 4.4%, but only because more people joined the workforce. Even though jobs appear to be plentiful, there is still one thing missing, and that would be pay raises. Hampton Pearson has more on the nation's employment picture.
Job growth was widespread and back on track in June. The robust hiring included 187,000 private sector jobs, as well as big upward revisions for April and May. The unemployment rate ticked up slightly to 4.4% because more Americans began looking for work, but not all of them got hired. Economists see a job market that's still expanding.
I see an economy that is solidly performing month after month in a very stable way. I agree that there's still room to run.
But wage growth remains stagnant. Average hourly pay up just 2.5% over the last 12 months at $26 an hour. Meanwhile, job openings topped 6 million in May, an all-time high. It appears the influx of job seekers last month offset pressures to raise wages. Economists say when it comes to wages, employers have most of the leverage.
Workers are very much alone in this economy. The union movement has been decimated in the private sector. And now, instead of negotiating with 1,000 workers, you're negotiating with one worker.
Hiring was broad-based, with healthcare leading the way, adding 37,000 new workers. Another 36,000 persons found jobs at restaurants and hotels. Government added an unusually high 35,000 new employees, almost all of them at the local level. And for the first time since January, the retail sector added jobs, 8,000 new hires. For the moment, it's the best of both worlds for the Federal Reserve.
I think it eliminates a lot of these recession discussions that some people were percolating in the last month or so, and I think it solidifies market expectations on the Fed.
Those same leading economists say it's not the Fed, but the fate of things like tax reform, health care, and infrastructure spending here on Capitol Hill that are the real keys to longer-term economic growth. For Nightly Business Report, I'm Hampton Pearson in Washington.
Mark Zandi joins us now for more discussion on the labor market and the economy. He is the chief economist at Moody's Analytics. Good to see you, Mark. Welcome back.
Thanks, Sue.
As Hampton mentioned, and I think you would agree, there was strong and broad-based job creation, but we also had upward revisions for previous reports, which seems pretty impressive.
Yeah, very solid report. Average monthly job growth so far this year is 180,000 jobs. That's just about the same rate of job growth we got last year in 2016. So the job market's humming, nothing's changing that. It's humming along here.
Why are there still so many unfilled jobs, Mark?
Well, we're at a record number of unfilled jobs, Tyler. Businesses can't find qualified workers. We have a 4.4% unemployment rate. Underemployment has declined to below 9%. These are consistent with an economy that is at full employment.
We need more
at this
people?
rate of job growth,
do we need more people?
We do. Yeah, the only way to solve this problem, if businesses are going to find the people they need, the only solution, at least in the foreseeable future, is to allow for more foreign immigration, which, of course, that doesn't fit with the current political environment. But that's really the only way. Without that, given the retiring boomers, the labor market, which is tight, is going to get tighter. Business's number one problem is a lack of labor, and that's only going to get worse.
Yeah. What about the participation rate in the past 6 months to a year or so? It's been a little bit worrisome. It's been a little low. Is it improving?
It's stable, so it hasn't moved for 3 or 4 years. It's just under 63%, which is actually quite an achievement given that the baby boom cohort, which is in their 50s, 60s, and now 70s, is retiring. So all else being equal, because of that, the labor force participation rate would fall 2–3%. But the fact that it's stable means that we're pulling in other disenfranchised workers who were discouraged, but now are finding jobs that are suitable and are stepping back in. So the participation rate is stable. I don't view that as an issue at this point.
You sort of characterize the labor market as tight and likely to get tighter. That would suggest, wouldn't it, that income gains would get greater eventually. What is stalling them, and do you expect income growth to accelerate?
Yeah, I do. So first point, wage growth is accelerating. The average hourly earnings measure that we look at in this report is probably the worst measure to look at. Some of the better measures that account for the composition of the workforce show a definitive, clear acceleration. Now, it's slow. It's slower than it has been historically, but it is accelerating. But I do think we should expect wage growth to be less than it has been historically for 2 reasons. One, inflation is lower. Because inflation is lower, wage growth is going to be lower. And secondly, underlying productivity growth is slower than it has been historically. And of course, wage growth and productivity growth need to go hand in hand. So I think the normalized level of wage growth going forward will be lower than we have experienced historically.
All right, Mark, we'll leave it there. Have a great weekend. Thanks again for joining us.
Yeah, you too.
Mark Zandi with Moody's Analytics.
Well, stocks started the day higher and basically stayed there following the release of that stronger than expected employment report. Gains in financial stocks offset losses in energy companies, which were pressured by a drop in the price of oil. On this last trading day of the week, the Dow Jones Industrials advanced 94 points to 21,414. NASDAQ added 63. The S&P 500 was up 15. For the week, all 3 major indexes were fractionally higher.
The Federal Reserve released its outlook for the economy days before Chair Janet Yellen is scheduled to give her semi-annual report on monetary policy to Congress. The central bank stuck to its script, saying economic growth will be steady but slow. It's also calling for a gradual increase in interest rates, continued job market gains that will underpin consumer spending, and it will begin winding down its balance sheet this year. The Fed chair is scheduled to testify before a House panel on Wednesday and the Senate on Thursday. Now, historically, this report has been released at the same time as the hearing.
It may be the handshake heard round the world. President Trump and Russian President Vladimir Putin met in person for the first time today. The meeting took place on the sidelines of the G20 summit in Hamburg, Germany, where leaders of the wealthiest nations are meeting. Eamon Javers has our report tonight.
It was the most highly anticipated meeting of the G20. President Trump and Russian President Putin addressed reporters before their closed-door conversation.
We've had some very, very good talks. We're going to have a talk now, and obviously that will continue. But we look forward to a lot of very positive things happening for Russia, for the United States, and for everybody concerned. And it's an honor to be with you. Thank you. Thank you.
In an off-camera briefing following the more than 2-hour meeting, Secretary of State Rex Tillerson said the conversation was constructive.
We're unhappy, they're unhappy. I think the perspective of both of them was this is a really important relationship. 2 largest nuclear powers in the world. It's a really important relationship. How do we start making this work? How do we live with one another? How do we work with one another? We simply have to find a way to go forward.
The U.S., Russia, and Jordan agreed to back a ceasefire in southwestern Syria, a topic Tillerson said the two spent a substantial amount of time on. They also discussed North Korea, how to address cyber threats, as well as Russian interference in the 2016 election, which Tillerson said Putin denied.
The 2 leaders agreed, though, that this is a substantial hindrance in the ability of us to move the Russian-U.S. relationship forward.
All of those conversations taking place behind closed doors here in Hamburg in an atmosphere of intense security. Protesters roaming the streets here in the city, burning cars, throwing rocks and bottles, and confronting police at intersection after intersection throughout the downtown section of Hamburg today, protesting against global capitalism. For Nightly Business Report, I'm Eamon Jabbers in Germany.
Still ahead, buy and hold. Are you looking for stocks to own for the long haul? Our market monitor has some names he says are not too expensive and not too volatile. Are you fluent in more than one language? If the answer is yes, there may be job opportunities for you for years to come. Kate Rogers is outside the United Nations in New York City with a look at where the jobs are.
I like finding the rhythm of language.
Utadil Dominique grew up fascinated by foreign languages and decided in high school she would pursue a career in translation services.
I'm a complete word nerd. I'm a language enthusiast, and I realized back then that I wanted to learn the English language, the nuts and bolts of it, and I wanted to learn it almost to perfection, if that's even possible.
Nearly 3 decades later, she's still at it, working as a contractor translating English into German for automotive, medical, electronics, and tech companies. As a certified translator with the American Translators Association, or ATA, Dil Dominique maintains her credentials by attending conferences, workshops, and continuing her education.
If you have the specialization and if you have the training, the education, the experience, it is definitely a demand for very highly trained translators.
Due to increased globalization, companies and organizations like the United Nations are seeking skilled translators and interpreters. In fact, the ATA says in the past few years, the number of people working within the translation industry has doubled. Opportunities for those in the industry are endless. Contracted positions are becoming increasingly popular, giving companies more flexibility. Highly skilled translators can easily make 6 figures annually.
A lot of companies are recognizing that there is a real benefit to offering their products and services in another language. They're basically responding to the demand out there as the global economy becomes more interconnected.
The UN is currently looking to hire up to 50 or so new translators to add to its ranks of 450 translators, editors, and reporters in New York City. Positions at the UN are highly coveted, and translators like Gia El Bardan work on tight deadlines. El Bardan previously worked as a translator in a peacekeeping mission in her home country in Lebanon. Today, she's translating documents from English and French into her native Arabic. The payoff is getting to be a part of something greater than just one's own career.
I think the best part of the job is the multicultural environment. We come from different cultures, backgrounds, genders, and age groups. And I think this is enriching on the professional and the interpersonal level.
For Nightly Business Report, I'm Kate Rogers, New York City.
And to read more about jobs for translators, you can head to our website, nbr.com.
Boeing sees a drop in jet deliveries, and that is where we begin tonight's market focus. The aerospace giant said it delivered 16 fewer planes in the second quarter compared with the same time last year. The company also said it received more than 200 orders during the same period. Boeing shares rose a fraction to 202.37. Well, we told you last night it was close. Now Berkshire Hathaway has agreed to pay $9 billion for the Energy Future Holding Company. That's the parent of Encore, which is one of the nation's biggest power transmission outfits. But Berkshire may face some competition. Reuters said the activist hedge fund Elliott Management is considering a rival bid. Berkshire Hathaway's A shares finished up slightly to a shade over $256,000. The snack company Mondelez said the recent cyber attack that targeted businesses across the world would impact its financial results. The maker of Oreos and Sour Patch Kids said the shipping and invoice issues it experienced following the attack would cause revenue growth for the second quarter to fall 3%. Mondelez shares were nonetheless up 16 cents on the session to $43.22.
Sears is closing some more stores. The struggling retailer said it will shutter 8 Sears and 35 unprofitable Kmart stores by early October as that company works on returning to profitability. Sears also said it will continue to open smaller concept stores, which it says allows it to focus on its stronger categories. The shares were off almost 2% to $7.78. Aircraft component maker Rockwell Collins is raising its share buyback program by $200 million. The company expects the new authorization to cover buybacks into 2018. Shares were unchanged in after-hours trading, but they finished the regular session up nearly 1% to 106.36. And the mobile software developer Synchronos Technologies said last night that it may consider selling itself. The company said its board of directors is evaluating potential strategic alternatives to maximize shareholder value. The shares were up 4% to $16.50.
And now to our market monitor, who likes large cap names he says could be less volatile and cheaper than their peers in this market. Last time he was on in November, he recommended Microsoft. It's up 18%. Johnson & Johnson, 11% higher. Cisco, basically flat. Andy Kaplan is director of research at Regent Atlantic. So nice returns on 2 out of those 3, and Cisco is just kind of sitting there. What do you see? You like low volatility. Is that a suggestion that you think volatility overall is going to pick up?
I think market volatility has actually already picked up over the past few weeks. And really what's happened is there's a certain segment of the market, we can call them the FANG 2.0, Facebook, Amazon, Netflix, Google, and now Tesla too, have really seen a surge in their share prices and their valuations, but no corresponding surge in their profitability. And that creates a very interesting disconnect. It means that when they fail to produce or when they have any negative news whatsoever, even small disappointments like we've seen in Tesla over the past 2 weeks, we can see some...
Pulls the rug out from under the stock.
Exactly.
Yeah, it does. The names that you have for us tonight are large companies, but they're basically at a better valuation than their peers.
They are.
And Citi is your first pick. Why do you like it?
I like Citigroup a lot. Citigroup has lagged behind its peers like other major banks like JP Morgan and Wells Fargo. What's interesting about Citi is they're a completely different bank from what they were in 2008. In 2008, they had to take on new equity capital, dilute their existing investors, and what did that do? That hurt their existing investors, resulted in them owning a smaller share of the pie. What's different today? Citi is a completely different company. They have much better capital. If you look at the Federal Reserve, the Fed did a stress test of all the major banks just last week, and Citi passed with flying colors. That is great news for Citi investors because that's a green light for Citi to start to hike its dividend and return more capital to shareholders.
Exactly.
Number 2 is Total, the big French oil company. And why do you like it at a time when oil prices, to put it kindly, have not actually been rallying?
You know, I'm not an oil bull myself, so why would I recommend an oil stock? It's precisely because I'm not an oil bull that I'm recommending Total. There are oil companies out there that need a high price of oil just to break even, just to be able to keep their doors open for the next few years. Total is not one of them. As a super major, they have a very low cost to produce. They've also diversified across other business opportunities. Not only do they get the oil out of the ground, they also refine it into the end product, which is a highly profitable business today.
All right, we're going to finish up with Apple, a company that many people...
Never heard of it.
Never heard? Yeah, exactly. And it plays no role in our life whatsoever, right?
No.
Almost, you know, it is the major player in the smartphone market.
It is, and it is actually the single most valuable company in human history.
Yes.
So why on earth would I recommend it if I'm a value investor? Well, that's because its profitability is high enough to match that market valuation. If you compare it to other major technology stocks, even Microsoft and Cisco, which I still believe are good values, Apple is at a discount. So what's the trick for Apple? What does Apple need to do to thread the needle? They need to. This is the 10th anniversary of the iPhone.
Right.
They need to create. They need to continue to innovate and continue to really create a product that.
How much upside do you think a stock like that, like Apple, would have?
You know, it's less about upside from growing earnings. It's more about upside from maintaining earnings, which is actually easier to do. Consumers are fickle, but they love their phones, and they get to upgrade them every 2 years. So
there we go.
We have to leave it there, Andy. Thanks very much. Andy Kaplan with Regent Atlantic. And coming up, graffiti, once a symbol of urban blight, is now the cornerstone of a growing business that started with a bright idea. One entrepreneur's story is next.
More than $5 million worth of baseball memorabilia heads to the auction block for the MLB Fan Fest auction early next week. Robert Frank got a look at the items and this growing asset class for collectors.
This is a Babe Ruth game-used bat that he actually used. So this in and of itself would be worth a six-figure price.
Okay.
What's really unique about this particular example is it's signed by Babe Ruth.
And Lou Gehrig.
And Lou Gehrig.
Wow.
And to our knowledge, it's the only game-used Ruth bat that's signed by both players, estimated at $300,000 to $500,000.
You're selling a baseball card?
We are.
How much could a baseball card sell for?
This one, Mickey Mantle's rookie card, first year tops 1952, and as such, the estimate is $300,000 to $500,000.
$500,000 for a baseball card.
Again, we're talking about an iconic blue chip athlete, American sports hero, and a piece that relates to them that brings people back to a time that they enjoyed.
These are golden gloves, literally.
Yeah, pretty unprecedented to have this many in one place. Roberto Clemente, along with Willie Mays, the only two outfielders to ever win 12 gold gloves. Certainly the most substantive offering of its type that's ever occurred at auction.
Each of these, and as a set, how much?
Based on some comps and what we expect, they're estimated at $50,000 to $100,000 each, and they will be sold individually. So now the game becomes, will somebody sort of try to one-up the other party, buy the first one, and then maybe succeed from there and keep going, control the market. It's always really interesting when you get a group of significant pieces of a similar nature like this to see how the gamesmanship will occur at the auction itself.
And late last week, actor Charlie Sheen auctioned off some of the most prized Babe Ruth memorabilia for roughly $4 million. The items included Ruth's 1927 World Series ring and the 1919 contract of Ruth's sale from the Red Sox to the Yankees.
Graffiti mushroomed in the 1970s and 80s, vandalism costing billions to clean up, and much of it is still around, indelible marks on urban landscapes around the world. And a New York City woman who once painted illegally at night is now finding ways to use the lessons she learned in graffiti and the skills she developed to build a legitimate business.
I think we can cut it right to the edge.
25 years ago, Claudia Gold, a.k.a. Claw, never imagined a business rooted in graffiti.
I would have said, you're crazy. I'm a criminal.
And she was. The 2005 documentary Infamy peeks at Claw's roughly 15 years on the run. Multiple arrests for decorating, some would say defacing, everything from walls to trucks to security doors in New York and L.A. She was a renegade, and not only because of what she calls her art. She was a woman in a male-dominated graffiti culture.
Graffiti prepared me to better handle it. Business, you start at the bottom and you have to really work your way up to understand hard work, being the best you could be.
Claw began painting the word claw in the late 1980s until one day she noticed that someone had painted over her work.
He left the W hanging out, and it was like one of those moments where I said, I don't have to write my name anymore.
Painting thousands of claws over the years gave Claw a reputation that Claudia Gold longed for, working by day with fashion designers as a stylist for films and photo shoots, and as a magazine fashion editor. She still sells her own vintage clothing at Claw & Company's 2.5-year-old store on Manhattan's Lower East Side. In the early 2000s, Claudia Gold's world began to merge with her alter ego's world. Friends suggested putting the Claw on T-shirts.
In 2002, I did. Put it in a friend's store, and he called me back the next day and said they're all gone. All of a sudden, I had a business.
Soon, Claw merchandise of all kinds was selling.
These were all the rage. Kanye was wearing them. Rihanna, MIA wore them.
Gold says her wholesale business did $1 million in sales in 2007, just as the hip-hop crowd brought streetwear into the mainstream. Sneaker brands looking for an authentic look, street cred, began reaching out to her.
This was the first sneaker I did for Nike, the Vandal.
A second Nike sneaker followed. Heads turned in the fashion world. There were deals with Fila, Uggs, Vans, and others. She's even designed a NASCAR, and now in some places, painted walls are becoming desirable. Starbucks paid Claw to do a wall not far from her store.
I'm charging upwards of $10K per project, and it can go all the way up to $100K, depending on the scope of the work. Well, Claw is a legend.
The clause inspired a local restaurant owner, Milan Kelez, to start getting approvals from building owners last year, aiming to make Allen Street a public gallery. In just 8 months, the new Allen project put up about 35 murals.
Well, I'm Sticky Stick.
London's Stick, a street artist known from Asia to Europe, painted a 7-story stick on Allen Street.
Street art is the biggest art movement in the world ever in terms of the number of people involved, in the terms of number of people that it reaches. We are part of a very exciting time in art history.
A time giving artists who began working in the shadows at least a measure of daylight.
Graffiti is a huge art movement that will be looked at like the Renaissance.
Time will tell, I suppose. Claudia Gold says she may be doing a wall for Nike at its corporate campus in Oregon later this year. And Stick, whose studio works have sold for tens of thousands of dollars, is selling some of the prep work for that New York City wall to help fund a program that teaches newcomers to speak English right there on Allen Street, the avenue of the immigrants.
What an unexpected story.
Yeah, very
interesting. It was
interesting.
great, though. Very interesting. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
Thanks from me as well. I'm Tyler Mathisen. Have a great weekend, everybody. We'll see you Monday.